Americans For Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, President of Americans For Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, July 12th, 2019. The Unnecessary Farm Crisis. Many commentators are pointing out the negative effects that the tariff war with China is having on American farmers. According to the U.S. Department of Agriculture, the number of farms in the United States peaked at 6,800,000 in 1935 and has unfortunately been declining ever since. A major reason for the decline in the number of farms is the income payroll tax system. Unlike their competitors in other countries that have a value-added tax, American farmers must include the price of all of their inputs into the prices of the products they produce for export. This means a farmer who grows tomatoes, for example, must include all of his production costs, like the cost of seeds, equipment, fuel, and repairs. Plus, he also has to include the cost of his employees' Social Security and Medicare taxes and the cost in time and money to calculate and pay all those income payroll taxes. All of these costs and many more are embedded in the final price of his tomatoes. The price to the tomato farmer of all these inputs increases because of the cost of the income payroll tax system. While it varies, the amount of these increased costs is estimated at between 10 and 20%. If we assume the average is 15%, then the tomato farmer will have to increase his prices by 15% just to stay afloat. Now, the American farmers' competitors around the world all have to increase their prices of their tomatoes by at least 15% because of their value-added tax. However, a huge difference arises between the American farmer and his foreign competitors when it's time to export their tomatoes. When an American farmer exports tomatoes to China, the additional 15% remains embedded in the price of his tomatoes. For example, let's say a container of tomatoes costs $10 when it leaves the United States. When it arrives in China, China adds its 19% tariff, so a container of U.S. tomatoes costs $11.90 in China. Now let's assume that a foreign competitor's container of tomatoes initially costs that same $10. But when those tomatoes are exported, the 15% value-added tax is refunded to the farmer and therefore removed from the price. So that container arrives in China at a price of $8.50. When China adds its 19%, that brings the price of the foreign tomatoes to $10.11, $1.79 less than the American tomatoes. As you can see, the American farmer is at a distinct disadvantage. The American farmer is at a similar disadvantage with the tomatoes he sells in the United States. In this case, assuming all the facts are the same, the American tomatoes are priced at $10 per container. But when the foreign farmer exports his tomatoes to the U.S., he gets the same 15% refund of his value-added taxes, allowing him to sell his tomatoes here for $8.50. Again, the American farmer is at a distinct disadvantage even in his own country. The bottom line is that since the U.S. income payroll tax system does not directly tax imports, the foreign-grown tomatoes will have a 15% advantage over American-grown tomatoes when they compete in the U.S. markets. Now let's look at the impact of estate and capital gains taxes. The competitive disadvantage is bad enough, but it gets worse for the American farmer. A farmer's primary asset is his land. Now, the land usually appreciates over time, but obviously it cannot be sold while the farmer is still operating his business. When the farmer dies, though, it is included in his estate. Today, there's a large exclusion exempting most farmers from the estate tax. However, the estate tax is always just one election away from having that exemption reduced or eliminated entirely, thereby greatly increasing the bite of the estate tax. This uncertainty about the estate tax makes planning for the future generations very difficult and very uncomfortable. If at any time the farmer decides that it's time to sell the land for a profit, there's a capital gains tax on any of those profits. So let's look at the farmer after the fair tax becomes law. Because competition will cause all of the production costs to be reduced, the U.S. farmer will be able to grow tomatoes and sell them not for $10, but for $8.50 and still make the same profit because the fair tax eliminates the embedded costs of the income payroll tax system. When they earn those profits from the sale of their tomatoes, they will owe federal tax only when they make retail purchases of new goods and services for personal use. In addition, they will be exporting tomatoes not at $10 per container, but at $8.50 per container. This makes the American tomatoes much more competitive with foreign-grown tomatoes in the world market. If the farmer wants to sell his tomatoes in the U.S. market, then they will be sold at $8.50. Furthermore, imported tomatoes will now be subject to the fair tax just like the U.S. produced ones. This means American products will no longer be subject to the income payroll tax penalty, either domestically or internationally, with the fair tax. Additionally, with the fair tax, farmers, like all other business owners, will not have to spend countless hours and hours and incur the costs of complying with the current federal income payroll tax system. With the fair tax, American farmers will no longer live in fear of the estate tax. They will no longer have to sell their farms to avoid the uncertainty of the estate tax, and they can freely, without tax penalty, dispose of their land either during their lifetime or after death. In conclusion, farm families, like all other U.S. families, deserve and are demanding to be treated fairly by the federal government. All of us deserve a sane tax system, i.e., the fair tax. Anyone who truly cares about the American people should say, it's time to pass the fair tax, the only truly fair tax.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org or bigsolution.org.